Hello students, Educator Guru is providing now for second year PUC Commerce students the model question paper issued by the board, Karnataka Pre-University Board in the subject accountancy, where we would like to get you the model answers for that whole question paper, that is from section A to section section E. Now, in the first consignment, you are going to get section A, B, and C. Right? So, I request those who are viewing for the first time, if you have not subscribed, please subscribe and share among your friends. Right? So, let us start the question paper of model question paper given by the board, that is PU board. I hope you can see that PU board, that is department PUC, that is model question paper which has been written. So here it is the question paper of 2022, right? Now you know that the instructions will be there. All the sub questions of section A should be answered continuously at one place. Provide working notes wherever necessary. 15 minutes extra time has been allotted for the candidates to read the questions. Figures in the right hand margin indicate full marks. That is for you, not for the, that is for the teachers, not for you. Right? So you need not see this one where I have typed along with the questions only. That is, let us start from section A. Section A. Not for profit organizations. Section A. Not for profit organizations are used for the welfare of dash society. That is called as non-trading concerns. Partnership deed contains name of the firm, name and address of the partners, profit and loss sharing ratio, all the above. So partnership deed contains all the above. It should have name, then name and address of partners, profit and loss sharing ratio, everything should be there in the partnership deed. Next, state any one right acquired by a newly admitted partner. State one right. I have given you two rights. Number one, right to share the assets of the partnership firm. B, right to share the profits of the partnership firm. That means he has the right on share of assets and right of what actually the profit. You can write any one of the in the following, that is in the examination. Goodwill is an intangible asset. State true or false. Yes, it is an intangible asset because it cannot be measured exactly. It's called as intangible. Which can be exactly measurable is called as tangible. So it is true. It is intangible asset. True. Give formula for calculating gain ratio. In retirement of partners, we get what actually gain ratio. Sacrifice ratio, we get what actually in admission of a partner. You should remember. So share gained or gain ratio is equal to new ratio minus old ratio. Right? Sixth question, accrued profit. Accrued is accumulated. Right? Profit is ascertained on the following ways: average profit, previous profits, on sales, all the above. The answer is all the above. You should know that where you get this one. Accrued profit is ascertained in the following ways. That is in death of a partner. Because we will not be knowing that when any person is going to die. In such a case, we assume on several ways, sometimes on average profit, sometimes on previous year profit, sometimes on sales. So that's why the answer is all the above. Then next, a company is a dash person. It is clearly said it is an artificial person. What is artificial person? Created out of the law is called as artificial person. Expand DRR, Debenture Redemption Reserve. DRR is Debenture Redemption Reserve. Income statement is prepared to ascertain dash profitability of the enterprise. That is either profit or loss. So that means it may be profit or it may be loss, but we prepare income statement. Common size statements are also known as dynamic analysis, vertical analysis, horizontal analysis, external analysis. It is vertical analysis, that is common size. That means you know that it will be reduced to 100%. Say all amounts will be reduced to 100%. Then we prepare the common size statement, then see that how it works. That is called as, what do you mean by vertical analysis? Mention any one type of solvency ratio. Any one type of solvency. What is solvency? Your assets are more than what actually your liabilities is called as solvency. What is insolvency? It is opposite. Your liabilities are more than what actually assets. It is called as insolvency. Now they have asked solvency. It is debt equity ratio and what actually quick ratio. So these two are called as, what do you mean by solvency ratio? Next, give one example for investing activities. Give an example for investing activities. So you know that investing activities, that comes under what you call your company accounts, right? So examples of cash flows from the investing activities: cash receipt from disposal of fixed assets including intangibles, or cash receipts from repayments of advances or loans made to third parties. This is regarding what you call receipts. Both are what actually receipts, plus point, right? Now the other two is example of cash outflows from the investing activities: cash payments to acquire fixed assets including intangibles, cash payments to acquire shares or debt instruments of other companies. So this is inflow, this is outflow. So that means whether it may be inflow or it may be outflow, that is called as, what do you mean by investing activities, is called as directly investing activities. So we have answered all the 12 questions of section A. Now section B. State any two features of receipts and payments. I hope you know that where you get receipts and payments, it is not profit organization or non-profit organization, whatever you call it as. That is features, that is characteristics. It is a summary of the cash book. Its form is similar to that of a simple cash book. Receipts are recorded on the debit side and payments are entered on the credit side. They have asked for 2, but I have given you 4 so that you can remember. It shows the total amount of all receipts and payments irrespective of period to which they pertain, which belongs to previous years, which belongs to current year, which belongs to next year. Everything will be recorded in receipts and payments account. It includes all receipts and payments, whether they are capital nature or of revenue in nature. Whether it is capital or revenue, everything will be recorded in what actually receipts and payments account. So out of 4, you have to write 2 in your examination. Name any 2 methods of calculation of interest on drawings. Number 1, average period method or shortcut method, when fixed amounts are withdrawn every month at equal time interval. Say assuming that every month the person is drawing 3,000, 3,000, 3,000, 3,000. Then it is called as average method or shortcut method. Whereas if a person draws the amount, that is different amounts on every month on different dates, then in such a case it is called as, what do you mean by, you have to calculate product method. So the 2 methods are average period method and product method. What is sacrifice ratio? I hope you remember sacrifice ratio. It comes in admission of a partner. The ratio in which the old partners agree to sacrifice their share of profit in favor of incoming partner is called sacrifice ratio. That means when you are admitting a partner, you are giving part of your profit. It is just like that. 2 students have their career, whereas 1 student or one of your friend, you don't have, that person doesn't bring career. Then what you will do from your career, that he is going to get you the food. That means assuming that each carrier costs 100 grams, 100 grams. If you are going to get 25 grams to your friend, that means how much each one will eat. The new friend will eat 50 grams, the other two will 75 grams. That means you have sacrificed 25 grams. That is called as sacrificing ratio. The formula is old share minus new share. Now, give the journal entry for the transfer of profit on realization. Where you get it realization? In dissolution of partnership, right? So the dissolution of partnership, we are going to prepare realization account. What is realization account? Realization account is a dissolution account where we will be transfer all assets and liabilities at book value to the realization account and find out whether it has realized more than that or realized less than that. Say they have given profit, then it is very simple. Realization account data to all partners capital account, to all partners capital account. If it is profit, assuming that in the examination instead of profit, if they ask loss, very simple, all partners capital account data to realization account. It is reverse entry that have to pass if they change the question in your final exam. Next, mention any two methods of issue of shares. I have given you what you call 6 types. You can write anything. They have asked 2 methods. Public issue or initial public offer. You might have seen in the paper IPO, that is initial public offer. Private placement or sale to group of persons. Right issue of shares. Bonus issue. Conversion of loans or debentures into shares, or issue of shares on preferential basis. All these things, they are called as what do you mean by issue of shares, but in a different manner. So you can write any 2 methods in the examination. Now, state any 2 limitations, that is disadvantages. We don't call it as disadvantage, we call it as what actually limitations of financial statements. 1. Do not reflect current situation. That means the financial statement will not reflect the current situation. The value of assets and liabilities shown in the financial statement do not reflect the current market situation. B. Assets may not realize, right? If the liquidation is forced on the company, some of the assets may not realize the stated value. Bias. Financial position depicted in the financial statement based on records, facts, accounting concepts and conventions used and personal judgments may not be realistic. That is called as bias. Bias is called as prejudice. You must be very careful with your prejudice. By seeing a person, you may say that he is bad. How can you know that? You cannot just jump into conclusion. In the similar fashion, by seeing what you call the figures, you will jump into the conclusion. But that is what you call one of the limitations of financial statements, because it will not show the current situation, it will not realize what actually the asset means, and you may have what actually the bias. Then one more is there, aggregate information. It is combined everything and we give one, right? Financial statement show only aggregate information but not detailed information. So we can write any 2. Now next, list any 2 techniques of financial statement analysis. That is how you are going to deal with financial statement analysis. You have comparative statements, common size statements, trend analysis, ratio analysis, cash flow analysis. You write only 2. Either you write comparative or common size, or you write trend analysis, ratio analysis, or you write ratio analysis and cash flow analysis. So these are the techniques that were used in our financial analysis. Write any 2 uses of cash flow statement. Uses, that is advantages. It provides information that enables user to evaluate changes in net asset of an enterprise and its financial structure. You must be very careful. Financial structure including its liquidity and solvency. That means what is your share capital and what is your borrowed capital, what is your other liabilities, everything depicts that is possible in your what actually cash flow statement. Cash flow information useful in assessing the ability of the enterprise to generate cash and cash equivalents. Cash and what actually cash equivalents. When you have prepared the cash flow statement, you will come to know that how it will be. It also enhances the comparability of reporting of operating performance by different enterprises. That means I can easily say that, say when you are comparing with your classmates, then you will come to know that where you stand, right? Because you are supposed to compare only with your classmates. You are not supposed to compare above that, what you call, those who are studying in BCom. No, you are not supposed to. Those who are studying in SLC. No, you are supposed to compare with the equivalents. Likewise, it also enhances the comparability of the reporting of operating performance by different enterprises. That means in the same field, how they are working. It also helps in balancing its cash inflow and cash outflow, keeping in response to changing conditions. So these are the advantages or uses of cash flow statements. They have asked you two, but I have given you four. Now section C, question number 21. So hitherto we did section A and B, it is completely theory. Now from section C onwards, it is only practical problems. So I would like to tell one thing. So whenever you are going to watch the video, it is better you keep one book and pen calculator with you along with me. So you keep on writing and follow along with me. It becomes easy for you to practice. It is only my suggestion. If you are capable, then that is secondary. But if you can learn along with me, you can, because I used to work out the problem slowly so that you can follow me. It remains in your mind permanently. Thank you. Let us start section C. X and Y are partners, commenced a partnership business on 1/4/2020, sharing profits and losses in the ratio of 3:2 with the capitals of rupees 1 lakh and 80,000 respectively. They earned profit of rupees 15,000 for the year before allowing. Most important, before allowing, that is following. Number 1, interest on capital at 10% per annum, interest on drawings X 1000, Y 800, commission payable to X 2000, salary payable to Y 3000. Prepare profit and loss appropriation account for the year ending 31/3/2021. So you know the difference between profit and loss account, profit and loss appropriation. Profit and loss account is a general account where you are going to enter all business expenses and incomes in that. Appropriation account, you are going to divide and write in the partners, what do you call, their personal, what do you call, interest on capital, interest on drawings related to the partners will be done in profit and loss appropriation account. Say earlier it was also called as, what do you mean by above the line, below the line. Above the line is called as profit and loss account, below the line is called as profit and loss appropriation account in company accounts. So here also we are going to prepare, that is after the profit and loss account, we are preparing profit and loss appropriation account. So very simple, profit and loss appropriation account, particulars amount to buy, debit and credit. Even you can say for the year ending 31/3/2020, you can write 21, you can write, no problem for that. So first one, say profit for the year is how much actually? 15,000. By net profit, it is 15,000. Then next, interest on capital at 10%. How much capital? 1 lakh and 80,000. So 10% of 1 lakh, 10% of 80,000. So to interest on capital, interest on capitals X, that is 1 lakh into 10 divided by 100, it is 10,000, right? Then Y, 80,000 into 10 divided by 100, it is 8,000. So total interest on capital payable to partners is 18,000. Next, commission payable to X is 2,000. To commission to X, it is 2000. Then salary payable to Y is 3000. To salary payable to Y, 3000. You may be surprised at what I left one item. No. Interest on drawings is an income. These are expenses. Interest on drawings is income. Interest on capital is an expenditure to the firm but income to the individual. Interest on drawings is income to the firm but expenditure to the individual. So that is the opposite of thing. So that's why interest on drawings, credit side, interest on drawings X 1000, then Y 800. So total is 1800. That's all the information has been given. Let us see that whether profit or loss. I hope debit side is more than credit side. So we will total it up. 18 plus 2 is 20 plus 3 is 23,000. So what is the loss? 002, right? So 6,200 is the loss. So by loss, transfer to partners capital account X, Y. That is in the ratio of, very simple, it has been given the problem, ratio is 3:2. That means 6,200 into 3 by 5, then 6,200 into 2 by 5. It is how much? It is 3,720 and 2,480. So this is the amount that is called as 6,200. Here I have written the calculation, so that I have written the amount here so that you will understand. So straight away if I write the amount, then again you may get confused. For that sake I have written 6,200 into 3 by 5, 6,200 into 2 by 5, it comes to 3,720, then 2,480. If you do this, you will get 6 marks very easily. Problem number 22nd. Rahul and Rohit are partners in firm. Rahul's drawings for the year 2021 are given under 4,000 on 1/6/2020, 6,000 on 30th 9/2020, 2,000 on 30th 11/2020, 3,000 on 1/1/2021. Calculate interest on Rahul's drawings at 8% per annum for the year ending 31/3/2021 under product method. So whenever you get a problem like this, try to first have the number of months calculation perfectly, because that plays the vital role. Instead of taking 10, if you take 9, the whole problem goes wrong, then you will get 0. That should not happen, right? You take 1 minute extra, no problem, but take what actually the number of months calculation. So calculation of number of months. Very simple. Drawing date and the other one is closing financial year date and number of months. So let us start one by one. 4,000 drawn on 1/6/2020. So 1/6/2020. Closing date for every year is 31/3/2021. 31/3/2021. 1st of June. 1st of June means June is also included. June, July, August, September, October, November, December, January, February, March. How many months? 10 months. 10 months. Then next drawn date is 30th/9/2020. 30th/9/2020. Closing date is 31/3/2021. So 30th/9 means September you should leave. You should take only now October. October, November, December, January, February, March. How many months? 6 months. 6 months. Next, 30th/11/2020. 30th/11/2020. Up to 31/3/2021. 30th/11. That means November is over. It is only December. December, January, February, March. How many months? 4 months. Now, 1/1/2021. 1/1/2021. So 1/1 means it is January is included. January, February, March. So closing date is 31/3/2021. It is 3 months. So this is vital. This is very, very vital for your product method of calculation of interest on drawings. Now, calculation of product. First calculation of product, then calculation of interest. So it is very simple. Drawing amount one side, then number of months, then product. Very simple, product. So first drawings is how much actually? That is 4,000. 4,000. For that it is 10 months. Then next drawings amount is 6,000. 6,000. Number of months 6. Next one is 2,000. Number of months is 4. Next one is 3,000. Number of months is, here it is 3. Find out product. 4 into 10 it is 40,000. 6,000 into 6 is 36,000. Then 4 into 2 is 8,000. 3,000 into 3 is 9,000. Just add it. 0, 0, 0. 93,000 total. That is product. Now calculation of interest. Calculation of interest. It is PTR over 100. It is nothing different. It is PTR over 100. Now, how much rate of interest has been given? Interest on drawing rate is 8%. So very simple. 93,000 into 8% into 1 divided by 100 into 12. 100 into 12. Then if you do this one, then you will get 620. Let me just check with the calculator. 93,000 into 8 divided by 1,200. It is 620. So interest on Rahul's drawings, it is how much actually? 620. Under which method? Under product method. Now problem number 23. Arun, Varun and Tarun are, there is no space, so be careful, are partners in a firm sharing profits and losses in the ratio of 4:3:2. Tarun retires from the firm. Arun and Varun agree to share equally in future. Calculate gain ratio of Arun and Varun. Very simple. Say the old ratio is 4:3:2. The new ratio is equal, that is half is to half. Then you have to find out gain ratio. Gain ratio is new ratio minus old ratio, because they are going to get more profit because one partner is going out of the firm. That is the plus point. If one partner enters into the firm, it is sacrificing ratio. If one partner is going out of the firm, is called as what actually gaining ratio for continuing partners. So what you should do, first let us write the formula for gain ratio. Gain ratio is equal to new ratio minus old ratio. So this is standard formula. This is standard formula. Now what you have to do, first find out the old ratio has been given, write that old ratio. Old ratio of Arun, Varun and Tarun. They are in the ratio of, that is 4:3:2. 4:3:2. That means 4/9, 3/9, 2/9. 4 plus 3 plus 2. That is 4/9, 3/9, 2/9. This is old ratio. The next thing is Arun and Varun agree to share profits. So Tarun retains. Tarun means who is the last person. Last person is returning. So Arun and Varun, they are going to agree, share the profits and losses equally in future. So Tarun is going to retire. This person is going to retire. Now his share, that means, is a profit for Arun and Varun. Then you have to find out new ratio. New ratio for whom actually? Arun and Varun. They are going to get half, that is 1:1, equal 1:1. The ratio is 1/2, 1/2. This is new ratio. This is new ratio. Then what you have to find out now? Gain ratio. So gain ratio equals new ratio. New ratio of, that is called as what actually? First you take Arun. New ratio is 1/2 minus, what is the old ratio? 4/9. 4/9. So very simple, 2 and 9. One is even number, the other one is odd number. You have to take LCM, it becomes 18. 2 nines are 18. So 9 into 1 is 9 minus 18 divided by 9 is 2. 2 fours are 8. So it becomes 1/18. So gaining ratio of Arun is 1/18. Likewise Varun. That is 1/2 minus 3/9. So again it is 18 is the LCM. 2 nines are 9 minus 9 2 threes are 6. It becomes 3/18. 3/18. So gaining ratio is equal to 1/18 and 3/18 or 1:3. Or 1:3, because common it is there, you can say it is 1:3. This is how you have to work out when gaining ratio has been given in the problem. Now problem number 24. Akash, Anil and Adarsh are partners sharing profits and losses in the ratio of 3:2:1. Their capitals as on 1/4/2020 were 70,000 and 90,000 and 60,000 respectively. Akash died, that means first person died on 31/12/2020. The capital date is how much actually? 1/4/2020. He died on 31/12/2020. So you have to think first April, May, June, July, August, September, October, November, December. How many months? 9 months, right? So your all calculation should be for 9 months. And the partnership deed provided the following. Interest on Akash capital at 8% per annum. It is per annum, but you have to calculate only for 9 months. Akash salary rupees 2,000 per month. So 2,000 into 9 months. His share of accrued profit up to the date of death based on previous year's profit. Firm's profit for the year 2019-20 was 24,000. This 24,000 is for 1 year. but you have to calculate for only 9 months. In that, what is the share of Mr. Akash, right? So this is only an assumption. This is called as profit and loss suspense account. We may get it or we may not get it, but this is based on the previous year. It is called as what actually suspense. His share of goodwill 12,000 as per is 26, right? So his share of goodwill, that means his goodwill itself is how much actually? 12,000. Ascertain the amount payable to Akash executor by preparing Akash capital account. You cannot pay directly to Akash because he is no more. So you have to pay Akash executor's account, right? So but you have to prepare and transfer the amount. So let us do one by one all calculations. So first you take, that is from 1/4/2020 to 31/12/2020, that is 9 months. Your calculations all should be for how many months? 9 months. First you calculate that. Then other calculations. What is that? The first one is interest on Akash capital at 8%. So number one, interest on capital within bracket for 9 months. Should understand it is for 9 months. That is 70,000 into 9 months into 8% divided by 100 into 12. So that comes to 50,40,000 divided by 1,200 is equal to 4,200. Next, second one. What is the second one? Akash salary 2,000 per month. For how many months? 9 months. So salary 2,000 per month into 9 months. 9 months is equal to 18,000. Next, third one. What is third one? His share of accrued profit up to the date of death based on previous year's profit. Firm profit for the previous year is how much actually? 24,000. Firm profit is 24,000, but you are supposed to calculate for 9 months. In that, what is the share of Mr. Akash? So share of profit usually it is profit and loss suspense account. You should remember it is profit and loss suspense account, right? For 1 year it is 24,000. For 9 months it is how much? So 24,000 into 9 divided by 12 is equal to 18,000. Right, or it is so 18,000. This is 18,000 is what actually for 9 months. What is the share of Akash? 18,000 into 3/6. Let us just check. They share profit and losses in the ratio of 3:2:1. 3/6, 2/6, 1/6. That means it is 3/6 into 3/6 is equal to 9,000. Right? Then his share of goodwill, it has been given in the problem, it is 12,000. So now we have calculated everything. Now we have to prepare account. Now we have to prepare Akash capital account. As usual, particulars, amount, debit, credit. So first say that what is the capital of Mr. Akash is 70,000. So by balance brought down 70,000. Then you need not worry. You take everything one by one. Here only it is there. First, interest on capital. How much? 4,200. By interest on capital. Interest on capital 4,200. Next, salary 18,000. By salary 18,000. Next, share of profit. Share of profit is profit and loss. Suspense account is how much actually? 9,000. By profit and loss suspense account, that is share of profit. It is only estimation 9,000. Then I hope you can see goodwill. By goodwill it is 12,000. Just total it up. If you total, it comes to 1,13,200. Let me check. 002. 1,13,200. 1,13,200. Now it should be transferred to ACA's executor's account. 1,13,200. That's all you have to do it. Very simple, right? Now 25th problem. Ganesh Company Limited issued 10,006% debentures of rupees 100 each at a premium of 10% payable, rupees 20 on application, rupees 40 on allotment, including premium. So including premium, it is how much actually? 40. So 10% premium of 10%. So you have to think that what is 10%? 10% of 100 is how much actually? It is 10 rupees. So 40 on allotment means 30 is allotment and 10 is what actually? Premium. That you should understand. Rupees 50 on first and final call. All the debentures were subscribed and the money duly received. Past journal entries up to the stage of first and final call money due. You must be very careful. If you keep on passing all what you call journal entries, it is wrong. They have asked only up to what actually? Due entry. So you have to do only the due entry of the last transaction, not the amount received. Even though they have given all the debentures subscribed and the money duly received, past journal entry up to the stage of first and final call money due. So you should read the problem carefully, then answer. So very simple. Journal entries in the books of Ganesh Limited, date of particulars, ledger folio, debit, credit. So date has not been given. When they have given, it is first what actually you are getting the application money. So bank account debtor, that is 10,000 into 20 rupees on application, it comes to 2 lakh. 2 lakh. To debenture application account, debenture application account 2 lakh. Debenture application money received on 10,000 debentures. 10,000 debentures. So first entry is over. Now once you receive that application money, then that money for what purpose? You have received for towards debentures. Transfer it to debenture account. So debenture application account debtor, application account debtor 2 lakh to 6% debentures account 2 lakh. Application money transferred to debentures account That's all narration what you have to write. Next, what is that? Next is what actually rupees 40 allotment including premium. I told you 10% of 100 is 10 rupees. That means 40 minus 10 is 30. 30 is towards allotment and 10 is towards what actually premium. So what is the entry you have to pass? That is very simple. Debenture allotment account debtor that is 10,000 into 40, it is 4 lakh to 6% debentures account that is 10,000 into 30, it is 3 lakh to security premium account 10,000 into 10 rupees, that is 1 lakh. Allotment money due along with premium. Now we have received the amount. Bank account debtor 4 lakh to debenture allotment account 4 lakh. Allotment money along with premium received. There ends the matter. Next, next one is rupees 50 on first and final call. So first and final call, that you have to write that debenture first and final call account debtor, that is 10,000 into 50, it comes to 5 lakh to 6% debentures account 5 lakh. Debenture first and final call money due on 10,000 debentures. After this, usually you say that bank account data to debenture first and final call money. But you must be very careful. Past journal entries up to the stage of first and final call money due. First and final call money due. You are not supposed to write that entry, that is bank account data to debenture first and final call account. If it is nothing wrong, but you are not supposed to answer, because whatever has been asked in the question paper, you are supposed to do up to that stage, right? This is how you have to work out this problem. Now problem number 26. From the following information, prepare statement of profit and loss for the year ended 31/3/2021 as per Schedule 3 of the Companies Act 2013. Revenue from operations 5 lakh. You call it as what actually? Sales. Purchase of goods 3 lakh. Salaries to employees 40,000. Leave encashment 10,000. It is very simple. When we have like this, both the things it belongs to employees only. So when it is belongs to employees only, it is called as employees benefit expenses. It's called as employee benefit expenses. Now after that, rent and taxes 30,000, repairs to machinery 20,000, tax at the rate of 30%. So rent and taxes and repairs to machinery, it comes under directly other expenses. So you have to prepare first two notes, then you have to prepare statement of profit and loss for the year ended 31st March 2013. Okay, so very simple problem, but in all the textbooks what happens, first they will get you the statement, then they'll be asked you to write what actually notes. That is not possible. First we have to prepare the notes, then we should prepare the statement of profit and loss. So first let us prepare working notes. Working notes. First one, that is note number 1. The note number 1 is, that is employment benefit expenses or employee benefit expenses. Under that, salaries to employees, salaries to employees 40,000. Then leave encashment leave encashment 10,000. So total it comes to 50,000. Then note number 2, other expenses. Other expenses, rent and taxes, it has been given the problem, that is 30,000. Rent and taxes 30,000. Then repairs to machinery, repairs to machinery 20,000. So add, then it comes to 50,000. So there are 6 items. Out of that, 4 items already been put directly, either employee benefit expenses or employment benefit expenses. You call it as anyway, no problem. Next, statement of profit and loss for the year ended 31/3/2013. So statement of profit and loss for the year ending 31/3/2013, particulars, note number, then amount. The first one, revenue from operations, revenue from operations Now note, it is 5 lakh. 5 lakh. 2. Other incomes. Other incomes, nothing is there, put dash. Then third one, total revenue. Total revenue, that is 1 plus 2. 1 plus 2, it is how much actually? 5 lakh. 5 lakh. Then fourth one, expenses. Expenses. Under that, you have purchase of goods. How much actually? 3 lakh. Purchase of goods, it is also called as stock. It is 3 lakh. 3 lakh. Then employee benefit expenses. You have the number, note number 1, how much actually? 50,000. So note number 1, 50,000. Next, other expenses. Other expenses, note number 2 is how much actually? 50,000. Note number 2, 50,000. So total expenses, 4 lakh. Total expenses 4 lakh. Now fifth, 5, profit before tax. Profit before tax, popularly known as PBT, profit before tax, that is 3 minus 4. 3 minus 4. 3 is, that is 5 lakh, minus, that is fourth one, total is 4 lakh, then it comes to 1 lakh. 1 lakh. Then sixth one, tax expenses. Tax expenses, tax at 30%. If you don't understand, 30% of 1 lakh. 30% of 1 lakh is 30,000. Take out the 30,000. The remaining is 70,000. This is sixth. That is 7. 6 is here, 7. That is profit after tax. Is 30,000. That is called as, what do you mean by 70,000? Profit after tax is 30, that is 70,000. Then you know that how you got it. It is very simple. From 5 minus 6, you will get what actually? 7. So 5 minus 6, you will get 70,000. Very simple. You will get one question like this. If you remember, usually 2 note will be there. That is, one is employee benefits expenses, then other expenses working note, and all other things are very simple. According to that, you can work out. Calculate current ratio and quick ratio from the following information. Stock 25,000, debtors 20,000, bills receivable 5,000, advance tax 2,000, cash 15,000, creditors 30,000, bills payable 20,000, bank overdraft 2,000. So first let us write current ratio formula. Current ratio is equal to current asset divided by current liability. Then what is quick ratio? Quick ratio is equal to, that is liquid assets divided by current liability. So what you have to do is, when you say this one, then you have to think of first calculations of current asset, which are all you can call it as current asset. Current assets. First, one by one we will take. Stock 25,000 current asset. Current asset. Debtors 20,000. Debtors 20,000. Then bills issuable. Bills issuable 5,000. Then advance tax. Advance tax 2,000. Then cash 15,000. Just total it up, because after that creditors, bills payable, bank, they are liabilities. 0, 0, 0. 67,000. Likewise, current liabilities. Current liabilities. You have three things. One is creditors, bills payable, and bank overdraft. All are current liabilities. Creditors 30,000. Then bills payable 20,000. 20,000. Then bank overdraft 2,000. Bank overdraft 2,000. So add it, it comes to 52,000. Then current assets over, current liability over. Now liquid asset. Current liability is there, but liquid asset. So liquid asset. What is liquid asset? The liquid asset is an asset which can be encashed immediately, which can be liquidated immediately, is called as what is liquid asset. So let me just take a stock. Why you have stock? What is the meaning of stock? Unsold finished goods is called as what? Stock. That means where you are not able to sell it in the market quickly. That's why it is called as stock. So that cannot be converted immediately into cash. So stock is not a liquid asset. Next, debtors you can convert. Bills receivable you can convert. Advance tax. Anything you have paid in advance to somebody, to the company, to the government, can you convert into cash? No, it is not possible. So advance tax is not there. Cash. Yes, cash we have. So then what happens? We have debtors, BR, and cash. They are called as liquid assets. Debtors 20,000. Bills receivable 5,000. Then cash 15,000. Then if you add this one, it comes to how much? That is stock. Debtors is 20, BR is 5,000, and cash is 15,000. Let us check. That is debtors 20,000 correct. Then bills receivable 5,000 is correct. Then cash is 15,000 correct. So total it comes to 40,000. Now what you have to do? You have to do current ratio and liquid ratio. Current ratio is equal to current asset divided by current liability. Current asset is 67,000 divided by current assets is, current liability is 52,000. So it comes to 1.28 is to 1. So current ratio is 1.28 is to 1. Normal ratio is 2 is to 1. 2 is to 1. You are less than normal, ratio. That means your liquidity position or current asset position is not up to the mark. For that, you need not write in the examination, but you should understand why we do. We would like to compare our current assets with our current liability to see the working capital condition of the business. Then quick ratio. Quick ratio is equal to liquid asset divided by current liability. So liquid assets is how much actually? 40,000 divided by current liabilities 52,000. Then it is very simple. 40,000 divided by 52,000, it comes to 0.769. You can say that 0.77 is to 1. This is good because usually it will be 0.5 is to 1. Now it is 0.77 is to 1, right? So this is how we have to work out current ratio and quick ratio. Now question number 28. From the following particulars, calculate cash flow from investing activities. What is cash flow? Say it is very simple. It is after tax but before depreciation. The simple meaning. That means whether we are getting cash or the cash is going out. That is inflow and outflow. We have to find out that is with our investing activities. So what is investing activities? Say here it is called as plan. Whatever that you have purchased, it is cash outflow. Whatever is sold, it is cash inflow. Let us try to understand. You have purchased a bicycle. You had cash. Now cash is out. The asset has come in. Right. So your cash is gone. Right. You have sold the car. Then it is called as cash is coming in. Car is going out. So likewise, you should say that plant purchase 4,40,000 cash outflow. Then sold. That means cash coming in 50,000. Investment 1,80,000 sold, cash outflow. 1 lakh sold, that means cash coming in. Goodwill you have purchased, that means it is cash outflow, nothing is there. Patents dash but sold, that is 1 lakh, cash is coming in. So you should understand this particular concept. Next, interest received on debentures held as investment rupees 60,000. So very simple, you are getting interest, that means cash is coming in, cash inflow. Dividend received on shares held as investment rupees 10,000. Again dividend received, that is we have invested somewhere else, we are getting that 10,000 is cash inflow. A plot of land had been purchased for investment purpose and was let out for commercial purpose use, and rent received is 30,000. Whatever that you have done, but you are getting a rent of rupees how much? 30,000. It is called as what? Cash inflow. So now you say that cash outflow 4,40,000, cash outflow 1,80,000, cash outflow 2 lakh, cash inflow 50, cash inflow 1 lakh, cash inflow 1 lakh, right? Then 60,000 cash incoming, 10,000 cash incoming, 30,000 is cash coming. Then we have to find out whether ultimate balance is cash inflow or cash outflow. The students, you should understand one thing. Say in the earlier stages you say that plus minus. Plus is called as coming, cash is coming. Minus is cash going out. This was earlier concept. Now according to the financial management concept, very simple. If I write only say plant, just write 40,000. If I don't write anything, write that is called as cash coming in. If I say plant 1 lakh and I will put bracket, it is called as cash going out. But technical term is called as, this is called as, what do you mean by cash inflow, and this is called as cash outflow. This you should understand. Say you are not supposed to write again plus minus. That is a wrong concept. For your understanding, you can write. Once I write anything within bracket which is called as what actually cash outflow. Anything that write without a bracket which is called as cash inflow. So this is most important concept for a commerce students, right? You should understand. So now cash from cash flow, cash flows from investing activities, investing activities, investing activities. You can write like this also. You can say the two columns. You can also write like that. I will show you. If you are so keen, you can draw lines and do the thing. That is not a big issue for you. You can write, right? Then you say particulars, then amount. That's all. Right? Now let us write one by one. One by one. Plant purchased 4,40,000. It is outflow. So purchase of plant, purchase of plant 4,40,000. I will put bracket. When I put bracket, it is outflow. Then in the same line, plant sold is how much actually? 50,000. Plant sale of plant, sale of plant 50,000. I don't put bracket. I don't put bracket. When I don't put bracket, it is called as what actually? Inflow. Next, goodwill. Sorry, investments. Investment is 1,80,000. Purchase of investment. Purchase of investments. Purchase of investment is 1,80,000. 1,80,000. Put bracket. Outflow. Then sale of investment is 1 lakh. Sale of investments 1 lakh. Don't put bracket. It is cash inflow. Then purchase of goodwill, it is 2 lakh. Purchase of goodwill, purchase of goodwill 2 lakh. Right within the bracket, it is cash outflow. Then sale of patents is 1 lakh. Sale of patents is 1 lakh. Sale of patents 1 lakh. Don't put the bracket, which is called as inflow. Next, 3 more items. Interest received on debentures. Interest received on debentures held as investment rupees how much actually? 60,000. Interest received on debentures. Interest received on debentures. Debentures. I will underline the word received. Then it is how much actually? 60,000. It is inflow. Inflow. Then dividend received on shares. Dividend received on shares. Once again, I will underline received. How much? It is 10,000 inflow. Then rent. A plot of land has been purchased for investment purpose and was let out for commercial use, and rent received is how much actually? 30,000. Rent received, rent received, rent received from letting out property, letting out property, property, how much it is? 30,000. 30,000. Then what you have to do? 1, 2, 3 outflow. 1, 2, 3, 4, 5, 6 what actually? Inflow. So what I can say here, just I will say don't write such things in the examination. You can say that outflow 8,20,000, that means which is showing in the bracket, that is 3,50,000 which is showing inflow. For your reference, this should not be written in what actually the examination hall. You write it somewhere else, that is in the what you call working column, you can write. But here to show you to understand that I have written here. So 8,20,000 and 3,50,000. It is very simple. Our outflow is more than what actually inflow. So how much it is outflow? Cash outflow from investing activities, it is 4,70,000. I will write bracket. Why I have written bracket? That means cash outflow. Here I have mentioned cash outflow is how much actually? 4,70,000. So this is how you have to calculate cash flow from investing activities. You should understand these concepts very clearly, right? Cash is coming in, earlier we called it as plus, cash is going out, we called it as minus. Then I have taken plant, that is 40,000, it is coming in, cash going out, bracket like. Now what we should do there, if I don't put any what you call bracket, then it is cash inflow. If I put bracket, then it is called as cash outflow. So this you should understand, then you should work out. In future, you are supposed to write like this only, not supposed to write plus or minus as per Financial Management and Companies Act, right?